Hey guys, welcome back. I'm Ashley Pickens here in Memphis, Tennessee. You guys, I've been in real estate since 2006 as a real estate agent, also as a real estate broker, but you all know me as your auction mama because I auction off foreclosures at the courthouse. I'm the one that says going once, going twice. So I did have an auction today. I'll put it up on the screen. It looks like an investor flipped it a few years ago and then someone bought it. They bought it in like 2021, 2022. Went up for foreclosure today. Opening bid was $49,000. The bidder got it for $1 over, $49,001. So they said that it did not have an air conditioning unit in the back. I guess some guys went and looked. They did not get to get inside of it, which is typical with auction properties, but they were able to look in the backyard, saw that nothing was in the unit. So opening bid was $49,000. They got it for $49,001. So let's talk about what some other investors might be doing in some of these housing markets, right? Especially with the market being so unbalanced right now, where there's more sellers than buyers. And what about these markets where hedge funds have been buying up properties, right? And they're starting to offload. So this article says when sellers can't sell, accidental landlords surge in markets where hedge funds are most exposed. Y'all see where I'm going? Y'all picking up what I'm putting down. So let's jump in. Institutional investors holding portfolios of 1,000 or more properties. Okay, these are these big hedge funds. Who am I talking about when I'm talking about big hedge funds? That's Invitation Homes. You guys, headquartered in Dallas, backed by Blackstone, one of the biggest owners of single-family rentals in the U.S. Heavy presence in Atlanta, you guys, and they are selling in, what's that, McDonough County in Atlanta? They are selling a lot. Go on Zillow and see. Progress Rental, American Homes for Rent, Tricon Residential. Those are just some big. Main Street Renewal, First Key Homes. I see First Key Homes driving around in their little trucks with the little key on the back. Big buyers in the Sun Belt and Atlanta area. So that's what we're talking about when we talk about investors, institutional investors, okay? So institutional investors holding portfolios of 1,000 or more homes have concentrated their holdings in just 6 U.S. housing markets. Atlanta alone contains 13% of all large portfolios, while Phoenix and Dallas each hold 5.4, Houston captures 4.3, and Tampa and Charlotte each representing a little over 4%. Together, these 6 metros account for over 1/3, 36% of large institutional holdings nationwide. Y'all see where I'm going? If they start offloading these properties, y'all, that could kill the housing market. Literally, that could kill your housing market. And I think, what do you think? I think there should be regulations on investors being able to buy in neighborhoods. They should not be able to buy an entire neighborhood, right? Because then if they decide to sell, because it doesn't matter, they don't care what you paid for your house. You could have paid $350 for your house, and they're like, well, it's not making us any more money, and they'll sell their homes for $300, right? That could kill your neighborhood. That could kill your property values. This article has reported these Sunbelt housing markets show increasing weakness driven by surging for sale supply and declining demand. For sale inventory jumped across all 6 metros year over year, with Charlotte's leading with 38%, you guys, year over year. Rising inventory tells only half the story. Demand has also declined across these same markets, with Dallas leading the decline at 22.9% fewer buyers year over year. Why? Because houses are just too expensive right now, especially in Texas, which y'all's high property taxes. Y'all got some high property taxes. This supply-demand imbalance creates pressure in the very markets where institutional operators concentrated their bets, introducing new competition in both for sale and rental markets. What are we talking about? This is where that accidental landlord is coming in. People who are trying to sell their properties, they're not selling right now, and now they're deciding to rent them. Instead of pulling them off the market, now they're turning into accidental landlords, right? So Data clearly shows rising number of home sellers in markets where investors have the greatest exposure. When these home sellers cannot find buyers, they face three choices. They delist and wait, take their house off the market, cut the price reduce, and find market clearing level, or convert to rentals, right? Y'all turning into landlords. Y'all, that's a whole other level, right? I'm always going to have a property manager. Always. Because you can't call me at 3 o'clock in the morning and ask for, I am not your emergency contact at 3 o'clock in the morning. Y'all call me and say your pipe burst. I don't know. Call AAA. I don't know. You got some Gorilla Glue? Get a bucket. I can't do anything for you at 3 o'clock in the morning. That's why y'all gonna have to have a property manager, right? I don't know. Don't call me at 3 o'clock in the morning. So, the last option creates accidental landlords, owners who enter the single family rental market not by design but by necessity. They got to sell their house. And I guess those are people who maybe have been called back to the office, right? They got to go to work and they were working remote and now they were trying to sell their house. Maybe they just can't afford it anymore and maybe their rental market is better where they are. I don't know, y'all, but that can kill a neighborhood too. No shade to renters. No shade to renters. But y'all know renters can kill a neighborhood, right? Because sometimes renters don't take care of their property the way homeowners would, right? They be parking in the grass, let their grass get too high. Don't put the garbage can back in. Garbage can sitting on the street all week. You know, you could be living next to Dennis the Menace. You know what I mean? Keeping Christmas lights up all year round. You know, so something like when my clients are looking for a home, if I see too many for rent signs, I'm like, this is not the neighborhood for you. No shade to renters though. No shade. None. Because some of y'all do right. Sometimes homeowners don't do right. You know what I mean? They be having barbecue grills on the front porch. You know, so, or maybe that's just in Memphis. I don't know. Anyway, let's keep going. So, this data, let's talk about the top 6 metro cities that had the most failed listings turned into rental properties. Okay, Houston is number 1, 6.8% failed listings turned to rentals. That's a 41% year-over-year change. 41%. Number 2, Dallas, 5% of their listings failed. That's a 32% year-over-year change, then turned into rentals. Number 3 is Phoenix. Phoenix, almost 4.5% of their listings failed and turned into rentals. That's almost a 10% year-over-year increase. And we have Tampa, Atlanta, and Charlotte also on that list of people their houses will not sell and now they are turning into landlords. You guys, how would you feel about that? Do y'all want to be landlords? Because sometimes, you know, it's different for an individual to turn into a landlord and they have never managed a property before, right? Houston leads with 6.8% of unsuccessful sellers pivoting to the rental market, you guys. So let's think about a couple of these things. Accidental landlords rate matters because they represent more rental supply entering already competitive markets. Unlike institutional or hedge funds who use sophisticated rent strategies, accidental landlords typically price units to cover cost, right? They don't think about you need a cushion for repairs. You need a cushion in case they decide they don't want to pay their rent that month, you know, and go on vacation instead of paying their rent. You need a cushion, and sometimes people don't think about that. They're just like, I just need to clear this mortgage payment, right? So this dynamic creates downward pressure on rents, exactly where institutional investors have concentrated their portfolios, right? So if the hedge fund is trying to charge $2,500 and this homeowner is like, well, my mortgage only $2,000. Like, that's how much I'm gonna rent mine for $2,000, and this hedge fund is trying to, you know what I mean? They want to rent it for $25,000. So now we got some competition here. But then, you know, these hedge funds just start selling off these properties, right? So, the combination of increased rental competition and weakening home price fundamentals suggest institutions may want to reduce some exposure in these markets, which would kill, like I said, your home value if these hedge funds start selling off in your area, right? So let's talk about the difference, and let's see what these hedge funds are actually doing, because I keep hearing, these hedge funds doing more selling than buying, right? And it's true. So let's talk about it. Acquisition versus disposition. Acquisition buy, disposition means sell. Let's talk about what they're doing. Atlanta, they bought 1,600. They have sold off 2,828. Go on Zillow and look in McDonough County, you guys, and you're going to see a whole bunch of for sales, and they're going to look like some flips. It's because these hedge funds, Invitation Homes is a big seller in Atlanta right now. Dallas, investors bought 2,400, sold 3,200. Houston, investors bought 1,582, sold 2,367. Tampa, they bought 757 and sold 1,444. Phoenix, investors, hedge funds bought 1,158 and sold 1,691. And Charlotte, hedge funds bought 1,172 properties and sold 1,299. You guys, what kind of impact does that have on a neighborhood? Because what are they selling them for, right? They don't have the same skin in the game that homeowners have, right? We bought this house as an investment to live in, and we hope it appreciates. And then here comes a hedge fund selling off all their properties because they don't care, because if it don't make money, it don't make sense, right? So now they're selling them off at a discount. That will kill your value. That will kill your equity and your home values, right? Because what do I say? The good thing about real estate is your home value depends on the homes around you. Vice versa, the bad thing about real estate is your home value depends on the homes around you. So if investors are offloading their properties in your neighborhood at a cheaper rate, there goes your equity and your home values. That's why I think there should be regulations about how many properties a hedge fund can buy in a certain area. Okay? So, I need a sip of water. These 6 markets represent 36% of large institutional holdings nationwide, okay? But account for 76% of net selling. The pullback is unmistakable. So let's think about the question. Is this defense positioning temporary? One possibility, follow me class, ladies and gentlemen. Institutions may be building cash reserves to buy when markets bottom. Are hedge funds and investors seeing something coming in the future? So they might be selling off these properties to stack some cash in order to buy some more properties when the market bottoms out. That if that does not tell you to negotiate if you are a buyer, nothing else will. Right? Is that their game plan? This is all hypothetically speaking. But if they're seeing the trends that these home values are going down, and they're trying to stack some money because they're going to come in and buy up these properties when these home values go down. Investors, what you think? What you thinking? Is that the play that we all playing? Is that the game? In that scenario, accidental landlords, home sellers, could transition from competitors to acquisition targets. So these people who are sitting on the market who couldn't sell, follow me, and now they have their house on the market for rent. They're renting it out. They're tired of renting it out. And here come these hedge funds buying from them. Because they're like, I'm tired of renting. I'm just going to lower the price and just get off of it. And here comes Baby Shark buying up these properties from these home sellers that are just tired, right? So, after struggling with property management, these reluctant landlords may become motivated sellers. Institutions would gain both leverage from distressed pricing and rental performance data to inform underwriting. So think about that. Is that the play? You know what I mean? Hedge funds offloading properties to stack cash to turn around and buy when these home sellers are just, over it, you guys. So some things to think about. I'm always saying, when hedge funds offload properties, what does that do to your neighborhood, right? Would you buy a rental right now if it barely cash flowed just to get the equity later? Are you an accidental landlord? Like you had to move, you had to go back to work, or you just couldn't afford your mortgage, right? And you were like, well, I'm going to let a renter pay this mortgage, right? if hedge funds start offloading in your neighborhood, would you buy from them, right? And what would you do if your home doesn't sell? Are you going to drop the price, rent it out, or wait it out? And how long before? Like, I mean, things that people forget. Sometimes renters don't pay. We've got like 5 million renters right now behind on their rent payment across the country. Like 5 million. I believe it's more than that. So when you become an accidental landlord and your renter doesn't pay, now you got to try to cover 2 mortgages. That's how people go into foreclosure, right? I've had a lady call me because she was paying her rent to her landlord. Her landlord was not paying the rent to the bank and was in foreclosure. The house was in foreclosure and she was getting the notices. She got my letter and was like, is my house in foreclosure? And I'm like, yeah. She's like, I'm the renter. I've been paying for a year. You know what I mean? And the landlord was not paying, right? But what about when the renter stops paying, right? Now who's going to cover this mortgage, especially if you've gone out and got another mortgage or you're paying rent somewhere? So is this just, when does this Band-Aid become a burden on people, right? Think about that. So are these big hedge funds helping or hurting local housing markets? And what happens when too many renters flood a neighborhood that used to be owner occupied? Right, I'm going to tell you, they're going to start parking in the grass, right? Or they're not going to take care of the landscaping like they do. I told you they're going to have these Christmas lights on the house all year. Y'all have seen it. Y'all know exactly what I'm talking about. So as an investor, what are you doing? Y'all flipping, holding, just sitting and waiting? They said when the market bottoms. Y'all waiting for this market to bottom, you know? So, I don't know. Would you ever live in a home owned by a hedge fund? I mean, a lot of y'all just don't even know that they're owned by hedge funds. But Invitation Homes, Progress, all those are hedge funds. Those are absolutely hedge funds. So you guys, that's it. I will link this article down below so you can read and tell me what you think. You guys tell me what you think. I definitely think there's needs to be regulation on investors buying in neighborhoods. For sure on that. You guys, that's it, you guys. Don't forget, I've got a couple masterclasses coming up this month. Tomorrow is 4th of July, so happy 4th of July. If you don't celebrate that, then happy Friday. If it's your birthday, happy birthday. You know what I mean? So masterclass is coming up. One on the 10th, July 10th, next Thursday. It is absolutely free. If you want to jump into investing and you don't know where, come to the masterclass. It's me. It's your auction mama live. Y'all can talk to me and ask questions. Y'all love that. And we're going to talk about all the phases of foreclosure and maybe which one would be best for you to invest in: pre-foreclosures, auctions, bank-owned properties. And then we've got another masterclass, bank-owned boot camp. So if you want to buy some bank-owned properties, you better jump in there. Where to buy them, how to finance them, how to make an offer on them. And if you're an agent, you know, I always throw in, if you want to start listing REO properties, I got you. I'm going to give you some advice on how to get into that lane. Y'all better try to, the foreclosures are coming, you know what I mean? So that's that. And then we have another pre-foreclosure class. It is next Tuesday, I believe, you guys. All the links are down below. If you want to reach out to homeowners before they go up for auction, how to talk to them, what to say, how to reach out, we're doing that. And then I have a 3-day workshop intensive, you guys. It's kind of like a little mini masterclass. I see y'all signing up. I see y'all signing up for all of them. The links are down below. Those 3 days, you're gonna have homework. If you know, you know me. You're gonna have homework. I'm gonna teach you how to reach out, how to send letters, what to say in the letters, what to talk to homeowners, how to talk to the banks, how to make offers. You get me for 3 days. 3 days of me. Can you imagine? Fun is all I can say. So you guys, all the links will be down below. You guys, as always, you know, I'm on Instagram, Your Agent Ashley on Instagram. You guys, if you enjoyed this video, if you learned something new, comment down below. Shout out to all the new subscribers. Comment down below. Don't forget to like the video and subscribe to the channel. And as always, you guys, thank you so much for watching, and I will see you in the next video.